Hello, so today we're here with Ryan Nehru from RSN Financial Solutions. Now Ryan lives in Ruislip with his family like myself. He is a mortgage and protection advisor with over a decade of experience working for companies like Morgan Stanley. He's had experience across private banking, investment banking and wealth management. And today we're going to run through some questions with him around mortgages that hopefully give you some really good pointers. Like myself, Ryan's decided to go out and start his own business. He's got great experience. He's gone down the mortgage route here. So he's helping families in Ruislip and Pinner and the local areas move home and get the best possible advice with mortgages and holding their hand all the way through the process. So what we're going to do today is ask Ryan some questions that we commonly get asked as agents and as brokers, and hopefully it gives you a good pointer as to what you need to do when you're looking to move home. Okay, Ryan, so first question. Now we put a post out on social media about a week or so ago, so we've got some questions off of the social media post. I've got some questions I'd like to ask you, and I know you've got a few questions that you get commonly asked that you'd like to discuss today. So first question we've got is, what exactly does a broker do, and what is the general process of a mortgage from start to finish? So over to you, Mark.
Okay, so in categorizing what a broker does, I think we can split it up into four key aspects. One is providing expert advice.
Yep.
So I'm qualified in my field as a doctor would be qualified in their field. I come at it from a slightly different angle to the way a client would look at it. And I'm trying to get them the best possible deal for their situation. Another advantage, the second point would be a broker has access to more options often than the client. So where someone would otherwise go on a comparative website or they'll just walk into their local branch. As a broker, we can go and see, I'm a whole of market broker, so I'm able to go and see all the different lenders available, and some of them only deal with intermediaries, like a broker. A third point would be that a broker helps to package the deal. So I will kind of put all the documents together, I do the application, I've spoken to the client, and then I'll often liaise with the underwriter for the lender to make sure that they understand the same viewpoint that I've seen through the client story. Often a client would never have that interaction with themselves with the lender, and that would go unnoticed.
You know what the lender wants, and you put the file all together and kind of put it to them so it's all nice and neatly packaged together. Yeah.
And what you'll find is there are no two cases that are the same. Even if you think there are two working class parents on stable jobs in two different families, their situations will always be slightly different.
Similar, but never the same.
Exactly. So kind of explaining their individualistic situation to the lender is quite important. Part 4 is kind of offering tailored solutions. So I'm able to look at a client's situation and assess which lender is likely to take them. So where a client might just go on the comparative website and see the best possible price, I don't know, 3.5%, and they say, I want that, they might not be eligible for that because of the situation that they're in. It goes through a lot of different factors, such as like credit checks, your deposit amount, the kind of the job that you have. There are loads of different requests that the lenders have.
Yeah, I over the years, obviously dealing with a lot of people buying properties and mortgage situations, it's quite a common thing where people just go, yeah, I've gone on a website or I've spoken to my bank that I bank with, and they've said I'm eligible for this amount. And they haven't given them all the detail. And once they go into the finer points of their situation, actually the lender criteria says, well, you're not suitable for this, whether it be like a visa or an employment status or anything like that. So yeah, I think that's something a lot of people get caught out with if they're not, especially if they're not run-of-the-mill kind of employed fixed salary. Outside of that, it's easy to get caught with that, isn't it?
Exactly. And I think that's how the whole mortgage and insurance brokerage service came about, because a client would face exactly the same problem that you're saying, and then they'll need help, and they'll come to someone who knows.
So your first point, you mentioned obviously your qualifications. So what did you have to do to get those qualifications? How long did that take you, and what kind of qualifications have you got?
So initially by trade, I was a chartered accountant. So I got qualified 12 plus years ago. And that's helped me kind of understand the financial sector a lot better in general. Over the last possibly 2.5 years ago, I done my CMAP qualification, where I was able to give mortgage and protection advice. Now, the qualification itself takes anywhere between 6 months to a year. And once you've done it, then you need to kind of get a kind of a CAS license and kind of progress your way through.
I imagine with your background, a lot of what you did wasn't news to you. It was all kind of fairly standard stuff you were. Okay.
Yeah,
So in terms of the process itself, we've kind of gone through there what it is your role is in that. But the actual process from the client's perspective, what does that look like in terms of, I give you a call, I need a mortgage run, I've never done this before, what's next?
Yeah.
What does that look like from start to finish there?
Yeah, so I've detailed this out on my website, you would have seen, but I'll walk you through it. So for example, you give me a call, we talk through your kind of initial situation, your context, what you want to purchase. We'll then kind of take some documents from you and we'll sit together and we'll do something called a fact find.
Yep.
Once we've done that, I've got a pretty good idea of exactly where you are, and you'll also have a great idea of your affordability and what you can then go out and get.
Yep.
At that point, we'll get you something called a decision in principle.
Yep.
So we'll select the lender that's best suited to you. We will get a decision in principle, which now estate agents often need.
Yep.
So when you found your property, you'll need to provide them with that. That will then secure your property.
But with that decision in principle, I know people call it, mortgage agreement in principle, decision, lots of different variations on that. But in terms of you being able to get that for the client, do they have to provide you with any information physically in terms of documents? Or is that kind of, at that stage, just verbal?
Everyone does it slightly differently. I try to get the documents from them so that if I'm providing you guys with a decision in principle, I want it to be
factual.
Yeah, and airtight. I think the lender that we're going to go with that's given us the decision in principle, they're going to accept us.
And do you find that sometimes clients give you information over the phone, but then once you get the documents, they don't quite tally up, and it can have quite a big impact on that decision in principle, can't it?
Yes. But all of that would be that would be my job to check. That's exactly why I take the documents up front, to be honest, so I can check it from the off, so that I've got the best idea, and then I can then tell them the truth. The aim here is for the broker to be representing the client, right? We are working in tandem together as a team to try and get you the best possible outcome.
Yeah.
Going back to the process flow, once you've got your decision in principle and you've secured your property, then you'll then get a conveyancer on board, it's a solicitor, who will then start doing the checks and everything for you. And whilst they're doing that in parallel, I'll be doing your mortgage application.
Okay.
You'll then receive a mortgage offer.
With that application, that's a point there that when you submit that, there is a lot of documentation that you would need from the client, right?
Yes, but I would have taken that all up front.
Okay.
So, I would have covered all of that already. So at that point, from a broker's perspective, there's not much the client really needs to do. So I'm taking that stress away from you. Yeah. So your stress is going to be more often than not liaising with the conveyancer. They'll be providing you with searches and checks that you'll have to do on their behalf. Okay. And in parallel, I'll be running the mortgage application. I'll then get a mortgage offer for you in place. Once your mortgage offer is released, you're good to go. Then your solicitor will arrange for something called an exchange date, an exchange and completion date. Exchange where you transfer 10% of the deposit and you're kind of locked in, and completion is where you get the keys.
Okay, but in terms of so once that mortgage offer comes in, the solicitor would get a copy of that mortgage offer as well. Yes. Is that at that point there your job kind of done?
Theoretically, yes, but in actual fact, I don't see it as done at that point. I see it as done once you've got the keys, and even after that, I'll kind of keep in contact with you just to make sure everything's going smoothly. Yeah. It's the right product. It still suits your needs. You're still able to afford all the payments and everything like that. It's just good to have a connection and a relationship with clients.
I think that's where businesses like yours and mine are very personal when you're dealing with clients. Moving is such an emotional experience, and I think a lot of companies that you may be getting into, corporate type companies, don't give you that peace of mind and comfort, whereas I think a client that was working with me, and I'd always recommend yourself, you've got that kind of communication link there where it's like any problems that are arising, there are always going to be potentially problems that happen, that you've got that comfort that, okay, I'm going to speak to Jane, or I'm going to speak to Ryan, or I'll get James to speak to Ryan to sort this out, and the stress comes away, and you've got expert advice happening there. So it's key. Okay, so next question, quite a tricky one for you. I know this is something it's sort of similar question that I would get asked from an agent's point of view. What does a broker do that I can't do myself, or a comparison site could do?
So a comparison site will give you kind of everything that's available to a customer. Brokers are there are some lenders that only deal with brokers. You won't find them on comparison sites. I'll give you an example. For buy to let, you can deal with BM Solutions, but BM Solutions won't deal with the client direct.
And they're a very popular one, aren't they?
They're a very popular one, yeah, and they don't deal with anyone except the broker.
Yeah.
So you wouldn't see them on comparison sites. In most instances, in a lot of instances, there are cases like this where the rates that you'll see for as a client are slightly different to the lender, are slightly different, sorry, to the broker.
Yeah, yeah. So me as an individual banking with, say, NatWest, the mortgage that they may offer me may be slightly higher than what they'd offer you because you're going through a brokerage.
In some instances, possibly. I'm thinking more along the lines of if you were looking on a comparison site and you saw the best rate for a buy to let being, I don't know, 4.5, but you don't have access to these intermediary banks these banks that only deal with intermediaries, you could potentially miss out on a BM Solutions, for example, that could come in at 4.3.
Yeah. Okay.
So yeah, it is always better to have it.
So basically, you as a brokerage, you have a much better access across the board of all products available.
Yeah. So
comparison sites will be limited on what they can show you. Yeah. Okay, that makes sense.
There are two types of brokers, right? There is an independent broker and a whole of market broker.
Yeah.
An independent one would be one that deals only with one bank or a handful of banks.
Yeah.
So they might get favorable rates just for that bank.
Okay.
But a whole of market broker is able to go across the board to be able to see more than 100 lenders.
So as an independent broker, limited on what products they've got, surely the advice being given out by those would be limited as well. There would probably or possibly be a better product out there for that client, but they can't offer it to them because they're limited on their...
Yeah, possibly.
Okay.
So they're incentivized only... They're probably, in most instances, they'll be working for a bank, right?
Okay.
So you might get a mortgage advisor within a Santander or within a NatWest,
Yeah.
and their interest is to sell those products.
Yeah. Okay. Cool. Okay, and what about, in terms of myself, if I just went to a bank directly, and I get this quite a lot when I speak to buyers, have you got your mortgage agreement in principle? Yes, I've just gone directly to my bank. Now, for me as an agent, the most important thing for me is that they've got an agreement in principle, which is great. But as a broker, what would be your kind of advice to them in terms of getting the best deal available? Is it similar to the comparison site? Is basically that you need to test all of the products to see what's available for you? Yeah.
So, like you mentioned, the agreement in principle is kind of the first stage, right? So, in most instances, people do exactly as you say. They go to the bank. They don't really even touch base with the broker. They'll get an agreement in principle. But it's when you come to do your application and it begins to go wrong.
Yeah.
I've had quite a few clients that way that have gone to their local bank, whoever they bank with naturally, and they've come back and they've said, "Oh, sorry, I've been rejected. Can you help me?" And then I'm able to kind of go and look at the whole of the market to see. But it's good just to try and front load that from the off.
Yeah. Well, that's what I was going to say. There's a question in here in a moment we'll touch on. But so basically, your advice would be skip the bank directly, just come to the broker directly, and then you can miss out a lot of that later work because you're doing it up front before you start looking. Okay, cool. How much do brokers charge, Ryan?
So this is a tricky question, and it ranges. Every broker you'll find is slightly different. I myself don't charge. So the brokers in general will take a procuration fee from the lender for placing business with them. Now, on top of that, brokers could charge something called a broker fee, admin fee, arrangement fee, or whatever they call it. It's under a banner. And those fees range from £100 up to 1% of the loan.
Wow, okay.
And I'd like to think it comes with the complexity of the case.
So like if it was 1%, it may be like a commercial type mortgage potentially.
Yes.
Okay.
But yeah, I myself don't charge.
Yeah, I know. Having dealt with a lot of mortgage advisors and brokers over the years, a lot of them do charge. Most of them a reasonable amount for that upfront work they do before that mortgage would go through, just to make sure they're covering their costs and stuff. But yours was all free of charge.
Yes.
Good. Cool. Okay, next question. Should I arrange my remortgage early or wait? And what if the rates drop if I go early?
So yes, you should arrange to set up your remortgage early.
Mm-hmm.
If your deal comes to expire, for example, at the end of Jan,
Mm-hmm.
it'd be good to reach out to a broker about 6 months before, or a broker, if you have a relationship with a broker, they should reach out to you.
Yeah.
Now, the reason for this is that you could start looking at the market, trying to assess what your next best option is. It might be that your best option is to stay with your current lender.
Yeah.
If they give you something called a product transfer, which is getting you onto the next favorable rate. But being able to first check the market and make sure that that is the right solution for you, that's the job of the broker. A second benefit of doing it early is that you'd be able to fix a rate, and if that rate gets better, your broker should be able to go back to the lender and try to move you across.
Okay.
Until that change date of the 31st
But
of Jan.
are you stuck with that lender though? If you tied into that lender at that point?
Yes, you are.
But that's
Well, not necessarily. You could cancel and go with someone else.
okay. And that's changed, though, hasn't that? That's a recent thing in terms of locking in early and then being able to kind of unlock that and relock it if a better rate comes available.
Yeah.
That's since COVID, right?
Yes, I think.
The cost of living.
Yeah.
type.
If whilst the rates are going up,
Yeah.
it's better just to lock it in early. So that
yeah.
was the reason why you'd reach out very early to try and lock it in. But now it was kind of working literally the opposite way, with the rates beginning to dwindle and come down.
Yeah.
It's now better to lock in a rate, and then if it drops, you'll be able to move over.
Yeah. Okay. That's the situation I'm in at the moment. Is that my mortgage is coming up for renewal at the end of the year, and I've obviously been keeping an eye on that. And I'm aware that if the rates were looking like they were going to be increasing, I would have locked in. But I do know that I need to speak to somebody now to get you and get that kind of locked in early. And if the rates go down between now and the end of the year, we can revise that offer. So okay, cool. So basically, go early.
Yes,
with a broker.
Definitely.
Next question. If I'm thinking of moving, when should I speak to a mortgage advisor or broker?
If you're thinking of moving, I think before just as you start your search for a property, if you don't already know your affordability, you should speak to a broker. If you know your affordability and whilst you're looking, I'd say the earliest time to speak to the broker, the better, because all of these processes that we kind of followed in the process chart, all of them suit with the brokers included from the off. And
it also takes a little bit of time, doesn't it? You can't just go, I want to buy a property next week, and you need a bit of sort of build up to that. And I've spoken to a lot of buyers on the phones, kind of registered with me to view properties, and when you kind of do your qualification, it's very quickly apparent that they've actually not spoken to anybody, have no idea what the mortgage level they can get up to, and when you kind of ask a few qualifying questions that would make it obvious where they would roughly be, you're way out of where you need to be. You're never going to get to the levels that you need, and that's where then I would obviously point them in the direction of a broker, and usually they come back and go, "Oh, that £1 million budget that I had is actually 600,000."
Yes, exactly.
Because their expectation was completely incorrect. So basically, as soon as you start thinking about moving, probably best speak to a broker, get some ballpark figures, and take it from there.
Well, let's go and take it from a different perspective. From your point of view, how long does it take from from offer of a property to completing? Is it about 2 months?
No, it historically would have been closer to that, but it's probably more like 3 to 4 at the moment.
Okay.
The time process.
It's within that time that the whole mortgage process happens as well. Now, the mortgage process should happen, you'd hope to think it happens within a month. And then the solicitor checks and the property searches and dealing with the seller side and the buyer side, that takes the remaining bit of time.
What could cause that? So that month period that you kind of go, I've met with Ryan, told we need a mortgage, we've found a property, that's all taken around a month to get the mortgage offer. What factors could make that longer?
So one factor could be the lenders, so the bank's time for service levels.
Okay.
So if they're super busy during peak levels of time, the time taken for them to review documents increases by a couple of days. The time taken for them to reach back out with offers, to do their valuations, to arrange valuations, all of that takes a couple more days. That could take time. A second bit of additional time would be is if the client takes a while to send the data across.
Okay.
It might be that
could they come back and ask for more documents? So you package it up and they go, actually,
Most definitely,
we need some more documentation because we're not satisfied with maybe what's here to justify the mortgage.
Yeah.
Okay. And I'm not sure if I've got this correct, but correct me if I'm wrong. Is it some banks will get the mortgage valuation up nice and early and then do the paperwork behind that, or do the paperwork before they instruct survey? Is it kind of industry standard?
It's an industry standard that they should be working in tandem. But I feel from experience and first-hand experience is that what they try to do is to make sure that the client is a viable client before they issue the valuation. More often than not now, lenders give free valuations, so they pay for it themselves. So just to recoup their cost,
To make sure that
they want to be quite sure it's likely to go ahead.
Okay, cool. And in terms of, so once a survey's been done or mortgage valuation's been done by the lender, you'd expect the offer to come through relatively quickly after that, a week or two?
Yes.
Yeah. Okay. Next question is, what are the main factors that can influence the amount I can borrow?
Okay, so affordability.
Yeah, basically, yeah.
So a client's previously, lenders used to give something called an income multiple. That's, I think, since been moved over to something called affordability, which is you could loan anything up to something that you can afford. Now, affordability gets affected by things like car finance, the number of dependents you have, your monthly spend on your outgoings. If your outgoings are significantly higher, this is why I was telling you initially, there's two families are never the same. It might be that one family spend a little bit more and therefore their affordability takes a bit of a hit when they go for their onward purchase. But yeah, those are the
So would
three
this
main
be
factors.
where, for example, if I came to see you 6 months before I started looking and you could see that I was spending a lot on, I don't know, holidays, cars, credit cards, you could give me the advice to say, look, get your credit cards paid off, get this paid off, so that my outgoings then became lower when it came to application time?
Yes, so theoretically that would work, but it's more, it still has to suit your needs, right? So the aim is to make sure
lifestyle needs.
Yes, your client still can't, it's if you're on board with that and your family are on board with it and you guys are all working towards that objective anyway, we want to cut costs, then yeah, it's a great idea. But if you then find it very difficult and then overlaying a big mortgage on top, the reason for the affordability check is to make sure that your mortgage payments, when they eventually come through, are not going to be too high, and therefore your chances of defaulting are not going to be too high.
Yeah, because the impression I was always given, the mortgage I've taken from the first mortgage, it was just like basically, what's your income? Like you say, multiply that, and that's what that's what we're willing to give. And my most recent mortgage literally was, what's your gym membership?
Yes, exactly.
Your monthly outgoings on X, Y, Z, credit cards, loans, anything like that. And the effect that it had on my borrowing capability was massive.
Yeah.
And it wasn't just a matter of just multiplying. It was 4.5 is the kind of, it massively changed that. So yeah, I think again, just comes back to speak to a broker before you even think about looking at properties, just to make sure you're in the best possible position.
Yeah. Like a helpful tip now, I guess, would be there of your outgoing expenses, there are going to be some that weigh more than others. So for example, outstanding credit card balance or monthly payments for hire purchase cars or outstanding loans that you might have, they will weigh quite a lot more than your food costs. Because your food cost and your clothing costs and your cost for holidays, those are all, a family can tweak that down. You could decide, I want to get a great house, therefore I want to wind those down. But you can't wind down these fixed costs.
And that was the advice I was given, basically, was get your credit card paid off. It's going to really help you with your multiple. So, okay, cool. So basically what we're saying is the main thing is going to be your outgoings and your incomes. Okay. Anything else other than that?
Affordability will it's more acceptance with the bank could get affected by your credit. So if a client has adverse credit, they will often be seen by the bank in a slightly different light. They might not get the same level of affordability constraint, like limits, as someone who doesn't have.
One of the other things that I've come across before is when we've had, traditionally you'd have like an individual or a couple buying a place together. Again, they're trying to hit an affordability that's beyond their reach. So they add in a third person, maybe I don't know, a cousin that wants to move with them, or a third person, or a brother, or something like that. How does that affect the multiples or not? It just gives them a top up.
It gives them a top up, but like, for example, like we were saying from the beginning, that's a criteria. There are some lenders that might be a bit opposed to that. There might be some lenders that are accepting of that.
Okay. So again, this is where a broker will be able to
Exactly.
guide you in all these situations. Say, okay, look, this might be an avenue that you could go down to help you get your property goal there.
That's exactly that.
Okay. Next question: what paperwork do I need to provide?
Okay.
So compliance and paperwork.
So during the fact find, just before we arrange a fact find, what I request from clients is proof of identification, proof of address, 3 months bank statements.
Yep.
To show your pay coming in and your outgoings, 3 months pay slips, and a credit report. So we often use something called Check My File, because it's got Experian, TransUnion, and Equifax. Those are the three big credit reporting agencies that lenders use, and proof of deposit. Yeah. So if you're purchasing a place, do you have your deposit in a bank account that you could show me proof of?
Yeah.
Those are the items, I think, from the off that we would require. And more often than not, once those are in, I won't really ask for much more after that.
Okay, so pretty straightforward. As long as you've got all your files in order at home, it should be a fairly straightforward process. Okay. In terms of the Experian report, again, there's a lot of people, I would imagine, that come across some bad credit perhaps they didn't know about in the background. Do you come across that often?
Yes. So these reports help to identify it to us as the broker, because essentially when we go to the lender, we're packaging a deal for them, and we're kind of acting almost on a little bit on their behalf to do the relevant checks.
Like due diligence on the client.
Exactly.
Yeah.
So whilst we go through the credit report, we're able to kind of review a client's outstanding issues, if they've missed payments with credit cards, if they've got CCJ defaults, if they've ever been declared bankrupt or have a debt management plan or something like that.
Okay. And does, if anything's flagged up on that, is it kind of a dead in the water, or is there ways around it?
No, for sure. There's definitely ways around it. It's not the be all or end all. There are across the world of kind of lending, there are high street banks. There are also other banks that kind of specialize in some of these instances.
Okay.
So a client can still definitely get a mortgage.
Again, so if you feel like you've maybe got some poor credit history to a point down the line somewhere, again, don't worry about that. Come speak to a broker, because it's probably a solution somewhere for them.
Exactly.
Okay, so how does the size of my deposit affect my mortgage? Okay,
so this is a good question. The size of your deposit affects your mortgage in that your loan to value gives you your mortgage rate.
Yeah.
It contributes towards your mortgage rate. So, for example, if you have a 90% loan to value versus a 60% loan to value, your mortgage rate will be significantly different. It might be, for example, 4.9 to 4.5.
So basically what we're saying is, if I've got a 10% deposit, which is traditionally what a lot of people kind of aim for, the rate that I'm going to get from the lender is going to be
slightly higher.
Not as great as it would be if I had a 40% deposit.
Yes, exactly.
Okay.
Now, often the deposit loan to value rates come down in increments of 5%. So if you've got a 95 to a 90, a 90% will be better than a 95, 85 to 90, and it goes all the way down in 5% increments up to 60%. Every lender is slightly different.
In terms of the differences in what that looks like, if let's say I had a £500,000 mortgage, and on that I had a 10% deposit, and on one I had a 40% deposit, what would that balance look like in a repayment, roughly, off the top of your head? And I'll put you on the spot there a little bit. But.
Potentially £50. Okay. So every increment of 5% could be, every increment of 5% loan to value could affect the rate, depending on where the rates are at any given time, between £50 to £100.
Oh, wow, okay. For every 5%?
Yeah.
Wow, okay. So that's quite a big...
Also depending on the loan amount as well.
So that's quite a big difference with that 40 to 10% deposit. Okay. So again, advice there would be to put as much down as you can if you want to achieve the better rate.
Yeah.
Okay.
But it also works over time, right? So people who are remortgaging, if say, for example, you've bought your house at 90%, but over the next 5 to 10 years, you're on a repayment plan and you're paying down your mortgage. When you come to remortgage every couple of years or in 10 years' time, your loan to value will be significantly better.
And also the equity goes up because the price has gone up, right?
Exactly.
Okay.
So
So
then
that 10% becomes 20%, 30%, 40% naturally over a period of time.
Exactly. So you find you get to 40% quite quick.
Yeah. Okay. How do you determine what type of mortgage product to recommend to your clients?
So this is a difficult one. There are many mortgage products out there, right? So I think the most important thing here from a broker's perspective is communication with the client. Kind of understanding the client's exact needs will help to determine what kind of product suits. For example, if a client wants to keep monthly payments fixed over the certain amount of time because they want to help with planning for a budget, and they want it safe, they'll pick a fixed term repayment plan, and then over what time period, if they plan for their kids to be in school over the course of the next couple of years, then it might be that fixing for 2 years is great because in 2 years' time, your kids might go to school, you might have more disposable income. All of these different scenarios are out there, and all of these different scenarios suit a client and suit the mortgage that benefits them.
So when would you know, I don't know how popular tracker mortgages are at the moment. Are they something that's a lot of people are taking out?
So at the moment, I'm finding that people are moving away from those tracker mortgages because they're traditionally now quite high, right? Because if the Bank of England base rate and the tracker mortgage is normally a percentage over that.
So under what circumstances there would you normally just kind of give that as a suggestion to a client?
So if a client if the interest rates were really low and a client was willing to take if they have a view that interest rates will remain low, then they won't need to fix. If they've got a surplus income coming through and they don't need to worry about being stable for payments. Or, for example, buy-to-let landlords who want to remain on interest only throughout, and they see low interest and they see it happening over a longer term horizon, they'll stay on the tracker. Okay,
so you've got kind of fixed rate, you've got tracker rates. Is there anything else that's a popular one that you recommend?
So there's a discounted variable rate. There are also something called capped rates where you are on a variable rate, but it's capped at a certain level. So it can't go higher than X.
So similar to a fixed, but it could come down.
It could come down, yeah.
Yeah, okay. And then you've obviously got the traditional kind of 2 year, 5 year,
time horizons,
10 year times. Okay. So you look at all of their lifestyle again and what might suit them best, and also maybe what's going to happen in the future, is to determine what works now for them.
Exactly. So understanding their perspective now and what their future plans are is quite important.
Yeah, I know. Whenever I've spoken to brokers in the past, it's always been, well, what would you do if you were me? Would you go for 2 year? Would you go? I imagine that's quite a difficult question for you to kind of answer them, isn't it? Yeah. Okay, next question is, how difficult is it to get a mortgage if I'm self-employed?
Honestly, no different.
Yeah.
So if you're an employee and you're working for someone, you're going to provide me with 3 months pay slips because you do your PAYE route. If you're self-employed, you're going to provide me with, I think, an additional document. The documents you need are something called an SA 302, which is your tax return at the end of the year that you submit. And then once you submit a tax return, HMRC will give you something called a tax year overview. So I'll just need that for the last 2 years, potentially 3 with some lenders. And
so you have to be self-employed or show self-employed income for 3 years.
Yes, there are some lenders that will accept less. But traditionally,
Okay, so the only kind of hurdle you may overcome is that you've got to have been self-employed, showing an income of a certain level for 3 years running, basically.
2 to 3 years. There are some lenders, like I mentioned,
specialist lenders
that will kind of look at your forecast for the next year and what you perceive going forward, and they'll make a decision based on that.
Okay, so a little bit like the old self-assessment.
Yes.
Yeah. Okay. Next question is, what is a guarantor mortgage?
A guarantor mortgage. Okay, so a guarantor mortgage is someone supporting your application, but they're not an owner of the property.
Okay. Bank of mum and dad?
Bank of mum and dad, exactly. Yeah. So having traditionally someone young young individuals will be buying a property. They'll have their parents as the guarantor. So if they were unable to make their mortgage payment, the bank will go to mum and dad,
Yeah.
and mum and dad have to front it. And they might have to put a property on the line to make sure that they can do that.
Right.
Traditionally, now that was back in the day. I feel like now banks are kind of moving away from guarantor mortgages. And it's become more of a specialist lending sort of proposition.
And that would maybe be an option for a younger couple, maybe that don't have the income that they need to fit the criteria for the lender, although they feel they can afford it, and then use mum and dad's kind of income to top up that multiple. Would that be right?
Yes, exactly. Yeah. But like I say, it's more of a specialist thing now than a high street.
Is there any kind of tips you can give to young buyers that in an area, especially like we were in Ruislip and Pinner, where the prices are very high, even for kind of a run-of-the-mill family home? What they can do to make that stretch, or how they can get some additional help, or is there anything out there for them?
So from an accounting perspective, what I find clients are doing at the moment is they get deposit help from their parents, which is fine.
Yeah.
You could get a kind of a gifted deposit from your parents, and then add that onto the savings that you've currently got, and suddenly you've got a bigger deposit, and your remaining loan balance is kind of smaller, which then falls into your affordability. So it is.
So getting the a bigger deposit as possible is key. Is there any tax implications of the gift deposits or not?
So you're allowed to give a gift if from parents to kids. There's a tax-free allowance every year, but also for a larger sum, there's the 7-year rule.
Okay.
So if your parents remain alive for 7 years, that becomes tax-free.
Okay, cool. Next question is, what is happening with buy-to-let mortgages currently? And if I was buying an investment property, what advice would you give me?
So the buy-to-let proposition was massive maybe 10 years ago. Everyone would purchase it because there were tax incentives. Now, I guess if you were to do it now, the rates for buy-to-let are still very competitive. There are still customers that do it a lot. But I think if you're going to do it in your personal name, the big consideration is the tax implication.
And that's in terms of you're paying tax on the whole amount of income that you receive for that rental property, isn't it? As opposed to just what is kind of mortgage free. And that goes on top of what you're currently earning if you're employed and have another job. That puts you into another tax band.
Before you, exactly like you said, before you'd be able to take off 100% of the mortgage and pay tax on only the difference between your rental income and after you've paid the mortgage.
And I would imagine, 10 years ago, obviously the deposit amounts that were being requested were a lot smaller.
Yes.
So you actually had bigger mortgage amounts, so that it was practically tax-free in terms of what you were paying on the rental income. And now that's completely gone. You pay tax on the full amount of rent. So if you're getting £2,000 a month rent, you're paying tax on the full amount.
There's 20%, I think, basic tax relief. But if you're a high rate taxpayer, that goes as well. You could potentially buy a buy-to-let in a company name. So there are special purpose vehicles, SPVs.
That's very popular at the moment, right? That seems to be what most people are doing.
So I think you buy it in I think you should, if you were to buy it, you could buy it in a company, and then you benefit from the 100% mortgage tax relief. However, under an SPV company, you'll have to pay higher fees for the lender, higher rates that the lender requires. That does eat away at your profit in another way.
Okay. Yeah, because I have seen, obviously, the number of buyers that we used to show properties that were buy-to-let investors, that number has come right down. I imagine that does have a lot to do with the amount of profit, whichever way you look at it, from a sort of a monthly rental income point of view, or end of year equity growth. It seems to have dwindled for them, and they're kind of looking at other avenues now where they can invest their money. Okay, so next question is, and I imagine this is a very personal kind of opinion as opposed to a professional factual opinion, and it's something that I get asked all the time in a different context, but what do you think the rates will do over the next 12 months? I usually get, what do you think the market's going to do this year? Or, it's kind of like a crystal ball moment, really. But what's your kind of thoughts on the rates?
So I think this is coming from a personal perspective more than a kind of a mortgage broker perspective.
So this isn't advice, this is just an opinion.
This is just an opinion,
Yeah.
yes, exactly. The rates have been coming down recently, and you'd expect or hope that they'll continue to do so. So in general, the interest rates are based on the market, the economic sentiment of the country, right?
Yeah.
So the last few years, you would have seen inflation through the roof, and that's why interest rates were then constantly going up as a result. That's beginning to come down. You'd hope that it continues to do so. The Bank of England target for their base rate is 2%. So you'd hope that they're trying to get as close to that target as they can. I feel the days of the 0% were a very big anomaly, and they might never come back again.
Yeah.
So
If it was a base rate of 2%, the Bank of England base rate, what would that kind of, I know they kind of work almost, I know it's not directly linked, but they usually are, there's some links between them. What would that look like from a mortgage rate point of view if it did go down to 2%?
So if you look at kind of standard variable rates, they're normally X% above the Bank of England base rate. These capped rates or the discounted variables, they all move in line with the Bank of England interest rate. So if the Bank of England interest rate was 2%, they might be 1% over. So you're looking at it around
3%. Okay, so and we're already down to there's something around that sort of 3.7%. I think I saw on available at the moment. So we're not too far off where they're likely to come down to, or we feel they're going to come down to and remain for a period of time around that figure, aren't they?
Yeah.
Yeah, and that's kind of my thought process as well. Is that I renewed my mortgage around 2 years ago, and it was at 3.7, and that was a big jump on what I was already paying at that time. I was like, whoa. And I only tied in for 2 years, so I was thinking, they'll probably come back down again. But then, we had all the Liz Truss stuff going on and everything else that happened during that time, and the interest rates had gone right up. And I was thinking, I wish I tied in for 5 years now.
Yeah.
But within those 2 years, it's gone up, and now it's back down to roughly what I'm paying at the moment anyway. So thankfully, I know a lot of people haven't had that luck, but my mortgage shouldn't change too much. Maybe go a little bit up or a little bit down, but not too much change. So yeah, I think from a buying perspective, if you are thinking about buying, not to be too worried about drastic changes in the interest rates.
Yeah, I think if you'd hope that if you're a buyer now, you're looking more at kind of, you'd hope for it to come down. You're looking in the 4% region if you're putting a decent deposit down. If you're a buy-to-let investor as well, you're looking in and around the 4 region. You'd hope that would stay or would get better.
Well, Ryan, thank you for talking us through those questions. Lots of really good advice there, really informative. I've certainly learned a few things today. Now, if you'd like to speak to Ryan or myself about anything around sort of property or mortgages, get in touch on the details below, and I can either speak to you myself or I can put you in touch with Ryan and take it from there. So thanks for watching.